The Nifty is up almost 80 points, 70 points now.
We have been respecting the range of 18,000 on the way down to 18,350. That's acting as a bit of a resistance for our markets on the way up.
Nifty is up 26 points.
Bulk of the action finished at 11 o'clock. I mean, that was the market. I mean, you had a gap up which got sold. There was a rebound. We end basically absolutely flat, 10-point change, 18,256.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for the day. Sensex and the Nifty end with marginal gains after a range-bound session. The Nifty Bank ends at a record closing high. PSU banks continue their gaining momentum. Vedanta approves a hefty 6,500 crores as dividend to its parent and minority shareholders, while Adani Enterprises may consider a large fundraise at its board meet on the 25th of November. Both stocks close in the red. TRAI's new tariff order effective Feb 1st brings relief to broadcasters on bouquet prices. The new regime allows for a higher cap and steeper discount to a la carte rates than earlier proposed. Zee Entertainment gains in trade on the back of the news. Max Financial falls to a 52-week low after a sale of pledged shares by a lender trustee. Meanwhile, Nykaa's woes continue with the stock falling 2% after the CFO exits. DCW closes 3% in the green after news of the company planning to double its CPVC's capacity and augment the capacity utilization of its plant to 100%. Inox Green Energy makes a subdued debut with stock lists at an 8% discount. All right, those were all of the top stories that we're tracking this evening. Here's a lineup of what we have in store for you. We bring you market opinion from Nilesh Shah of Envision Capital, and in Corporate Voices, we have with us Devansh Jain of Inox GFL Group. All right, so those were all of the top stories and what we have lined up. Let's start with the first headline and the market action today. It was a range-bound session on Dalal Street, which ended with marginal gains. The Sensex gained just about under 100 points. And the Nifty gained over 20-odd points. The Nifty Bank, in fact, ended at a record closing high, which was one of the key highlights of today's trading session. Prashant Nair is here with a wrap.
It's becoming a bit of a feature with this market. For the bulk of the session, the market does nothing. Action right at open and action right at end. And today was no different. I mean, the market did what it had to do in the first 2 hours of trade. By 11 o'clock, the market went sideways. For the next many hours, it traded with a 40-50-odd point change before coming alive again at 2:30. We saw a bit of a creep higher, and at 3 o'clock, starting 3 o'clock, there was a dump, and the market ended absolutely flat, just a 10-odd point change. Similar price action on the Nifty Bank as well. A Nifty Bank, although did a little better as compared to the Nifty. Mid caps and small caps ended about a quarter and a third of a percent higher in that range. Large cap gains and names like Apollo Hospitals, JSW Steel, HDFC Life, amongst others. Losses coming through in Adani Enterprises, Ports, Power Grid, and the like. Lots of sector-specific activity, right? Sector, subsector. So fertilizers is the area which saw a big boost. RCF, GNFC, GSFC, NFL, FACT. This is a new sector which has come into momentum today. The rail stocks are speeding ahead. RVNL, IRCON, RailTel, and they've had fabulous runs in this month so far, and the previous one as well. Broader gains, apart from these sectors in RHIM, KPIT, NBCC, HUDCO, a lot of these PSU, smaller PSU names coming into action. BKG was up about 10% by close. No such luck for the new age, newly listed companies, Paytm, Nykaa, Delivery, Policy Bazaar, all ending lower. Policy Bazaar, of course, came up a little bit, ending flat. So that's the market for you. As we kind of grind into the close of the year, you got to be wary of illiquid markets. And this is a feature which happens every year. Price moves seem exaggerated. In the very near term, you've got the FOMC minutes, which we get today. And tomorrow, you've got the US markets, which are shut because of Thanksgiving holiday, which will only add to illiquidity. The market did come off today. We'll come back tomorrow with, of course, cues from the US and the FOMC minutes to see if we can pick up where we left off.
Okay, well, let's get in some opinion on that note. Nilesh Shah, MD and CEO of Envision Capital, expects tech stocks to make a strong comeback over the next 2 to 3 quarters. He also discussed his take on new age stocks and the pharmaceutical space.
Believe that the lows that we've seen in 22, I don't think we're going to revisit those lows. What it looks like, I think, is from the kind of layoffs that we are seeing in the United States. Finally, the indirect fallout of that is going to be essentially a better environment for hiring, better environment for wage costs. That, in a way, will provide a strong cushion to the margins of IT companies. While growth for the next 3 to 4 quarters could still be on the lower side of the range, but I think that's probably going to be a more transient kind of a phase. And maybe 2 or 3 quarters from now, you'll see again, IT come back very, very strongly. And I think the valuations are very, very attractive. So you're going to see a combination of growth coming back, margins coming back, and then, of course, valuations being attractive, perfect for growth investing. Fraud that we saw on pre-IPO or IPO or even post-listing, that is kind of completely gone out. What it looks like is that the valuations are attractive, especially for a long-term investor. I honestly don't know how these will behave over the next few quarters, but if you have maybe a 2 to 3 year kind of outlook, I wouldn't be surprised if these end up delivering some solid returns. Not all of them, but maybe just to select 1 or 2 out of them. Currently, in the very short term, the pressure from essentially the investors who came in the IPO or pre-IPO, I think that pressure will continue because they all need to book some profits or whatever profits are left out there for them by the year end. It's probably been the most disappointing kind of sector in terms of performance, especially from if we were to kind of look at the COVID environment and where we all thought that over the next few years, pharma is going to be a standout sector, and that has unfortunately not played out that way. And I don't see yet any kind of silver lining out there in terms of, the pricing. I think it's still a hope trade that, too much of the pricing erosion has happened and all of that. But I still think overhang in terms of pricing, in terms of regulatory stuff, in terms of margins, they still kind of continue to kind of be there. The reality is that there are, way many more number of other opportunities, many more other sectors which are today firing or at least are expected to do much, much better, especially on a risk-adjusted basis. So I'm not too sure whether pharma, it's not gone anywhere, but I don't think it will go anywhere.
Okay, well, on to the second headline this evening. Vedanta has approved its third interim dividend of 6,500 crores to its parent and minority shareholders. The record date for this will be Wednesday next week. Nigel D'Souza is standing by with the details on this story. Nigel.
Vedanta declared the third interim dividend to the tune of around 17 rupees and 50 paise. The total payout will be close to around 6,500 crores. The parent entity holds nearly around 70% stake in the company, so they'll receive bulk of that dividend. Now, keep in mind the record date has been fixed as November 30th itself. The total dividend that they've declared in this year itself is around 68 rupees and 58 paise. The problem is that they're paying out more than what they're receiving even from Hindustan Zinc. And the net debt was around 32,000 crores odd. That's likely to inch up. We'll also be waiting for clarity in terms of what does the promoter entity want to do with this money, because most of the debt obligations are already satisfied. Citi, they have a sell rating on the stock, the target price of around 235 rupees. They say that Vedanta has paid out dividends in excess of around 3 billion, but they've received around 1.2 billion from Hindustan Zinc. The dividend that they've paid is more than what they were estimating. However, they say that the commodity cycle could be a little bit brittle or could slow down a little bit. In that event, things may not look very good. They also highlight the fact that demand for aluminium as well as zinc is a tad bit muted, and the commissioning of its captive coal projects as well has been delayed. Put all this together, Citi maintains the sell on the stock.
Okay, all right, Nigel, thanks very much for that. Well, sticking with big moves that took place, Adani Enterprises may consider a large fundraise at its board meet on the 25th of November. Reports say that the amount raised could be in the range of $1.8 to $2.4 billion. Vivek Iyer has more details on this possible deal.
Well, the stock in focus was definitely Adani Enterprises. The company has informed the exchanges that a board meeting is going to be held on November 25th, 2022. And this meeting is mainly to consider and approve fundraising proposals as far as Adani Ent is concerned. Now, this particular fundraise could either be via the FPO, that is the further public offering, or it could be via a QIP route as well. It'll be interesting to see, what is the exact route by which the company manages to raise funds. Now, when you're talking about, what exactly are newspaper reports indicating, newspaper reports are indicating that the size of this particular fundraise could be quite large. It could be in the range between $1.8 to $2.4 billion. And interestingly, if you look at the shareholding pattern, the promoter and the promoter entities own over 72% stake in the company. So it'll be interesting to see if it is indeed via the QIP route, what is the dilution and what is the exact quantum of funds that the company manages to garner.
Okay, all right, Vivek. Thanks very much for that. So that's on Adani Enterprises. But let's move to the third story today. TRAI's new tariff order effective Feb 1st has brought relief to broadcasters on their bouquet prices. The new regime allows for a higher cap and steeper discount to a la carte rates than proposed earlier. Analysts see this as a positive. Z Entertainment gained in trade on the back of this news. Vedanta is here standing by with a wrap on the new rules and the stock impact.
Well, TRAI has made some amendments to the new tariff order 2.0 yesterday, wherein they say that as per the earlier new tariff order 2.0 version, the pricing on channels forming a part of the bouquet were capped at 12 rupees, which has now been changed and revised to 19 rupees. Also, as per the earlier new tariff order 2.0 version, there was a capping on the discount of 33% for bouquet prices, but as per the new NTO 2.0, the broadcasters are now allowed to offer 45% discount. So that is a benefit. Also, we have to wait for the implementation of this new tariff order, which is down the line and it's another 2 months to go. Also, the channel pricing list, which is required to be submitted on the 1st of Jan 2023. Nuvama feels that NTO 2.0 implementation is positive for all the broadcasters and they expect a good recovery in the advertising revenue for broadcasters due to the gross margins which are improving for the consumer companies. So net seems positive for all the broadcasters as subscription revenues now have the potential to increase in an environment which already has a subdued advertising revenues. Back to you.
Okay, all right, Vedanta. Thanks very much for that. Time for a break now, but stay tuned. We'll be back in a jiffy with all of the other top stories.